Hi guys, good morning to all of you. This is Kel once again, and this morning's 19th of May 2025, Crazy Market Talk with Kel. All right. So last night we have a special session. The recording will be out approximately about noon time. All right, noon to 1 p.m. Yeah. All right. So we will continue to share about what today's market will be. And good morning to you, Jerry. That's nice to see you. All right, guys. If you can hear me loud and clear, press one right now so that we can know that the transmission is going fine. Thank you very much. All right, while you are doing that itself, disclaimer apply as usual. Please make sure that you guys do your risk management. All right. The second half of today, we'll be covering the PTP indicators continuing, and we recap again the 5% rule. Now, I think the 5% rule, you guys are quite, you'll know about it itself, and you guys are quite expert with that. Okay. But today, just go through the motion because I need to cover all the PTP indicators. Now, there's something to take note is that we do receive pretty much feedback regarding about the this coming boot camp. So seemingly itself, right? Most of you want the boot camp, but you guys can't travel due to your the not able to do the overseas trip. So we are actually going to consider to do a boot camp in Singapore instead. That means that we have a one whole day training from morning till the afternoon. All right, then we see how the cost will be like and stuff like that. And of course, you are still able to use your bonus credit to defray some of the costs. So we will see how the number goes. We need to hit a certain figure before we can consider doing that. Yeah, I'll let you know later. Okay, so that with that itself, let's go into the market right now. Now, before that, let me explain to you certain thing regarding about what we mentioned last night. And hold on, yeah, let me explain it to you. Okay. Okay, so let's just continue on the topic about Moody's downgrading of the US. Okay, you must understand that there are three different agencies. We have Moody's, with S&P, we have Finch. All right, so the thing is this, S&P and Finch, they already downgraded US back then itself, yeah? So from then on, and Lehman Brothers, and then now, basically they are still at the double A. Then only Moody's, who actually has hold about 40% of the market share, has been holding on. But now Moody's has decided to also cut the US the rate itself. So you must understand the consequences and the subsequent repercussion. Okay, first of all, you must understand that USA, when you have triple A rating, okay, when you have that, that means that you have no risk at all. That means that this is a sure win trade. You put in the money, you sure win. There's no way to lose. So now, with the rating agency bringing it down from the triple A, right, that means that now there is risk. Now, you must understand that a lot of people, when a lot of these banks, when they loan out money to financial institution, right, the institution, they use their cash to buy a lot of these AAA bonds, right, from the US government. And because it's so good, right, so there's no risk. Then because of that, they remortgage it for more cash to do their other stuff. So as long as the market, the money is there, there's no need to worry. But now the problem is that if the AAA now no longer there, that means that the banks have the right to reject, okay, the loans or once back some of the loans or cut the loans. Now this is going to be a big issue for those companies that use this for get mortgages. That's one. Number two, now a lot of hedge fund itself also they when they invest, they also put this as their top portfolio. But when this portfolio go down itself, right, some of the fund managers or some of the clientele will not be happy with that. They will also look at it and ask them how do they defray from this. Now, the third one itself is most critical, is that if the bond market now is not even certain and it offers 4 to 5% return, it's not even certain, then the stock market itself right now is like at the high level here. if the stock market cannot even give me the certainty of the 4 to 5% because S&P, I mean the GDP itself is expected to grow between 1 to 2%. Warren Buffett says that the US may not have a good outlook for the next few years. So all these things, right, will carry a repercussion. So you must understand that this will definitely hit the market, and then when that happens itself, right, there will be selling of the bond or selling of assets that is valuable. So that's the reason why I'm saying that we haven't started the whole thing yet. The thing haven't started because only it happened over from Friday. So it takes some time for the market to react. You will start to see all these things coming in the later part. Not now, maybe about 1 month later or 2 months later, but it will definitely happen. Because the rating agency cannot like today cut down, tomorrow recover. It cannot, they can't do that. So this cut itself, right, is going to hit the market for a while. So the whole thing will be felt maybe in late May or early June. Okay, so this one take note. If all understand this, press number 2. If you don't understand, no worry. I try to make it a simplified version by typing later on itself. Okay. All right. So of course you say, but KEL, wait a minute. You say that the market like so terrible, but the market haven't reacted yet, all right? So what is there to worry about? Exactly. You must understand that it happened on Friday after market close. So today the market is still not open yet. The Americans are still sleeping. All this is a night for them. So you won't see the reaction so fast. Okay. And it take time. Yours is bond market. It won't happen instantly. The punch itself will come slow, so will come later and very hard. But at the moment now, from now till then, it'll be very slowly go into the market. Yeah. Okay. So that is one thing to take note of. And let's look at the currently now the US dollar, how it's performing. So let me sort the chart here. Apology. All right, now this is let's look at the US dollar at the moment right now. The US dollar. Okay, the US dollar seemingly is not really affected. All right, so it seems very calm at the moment. On yeah. Okay, the US dollar is still very, very calm. All right, at the moment right now. So you may say that, hey, Cal, you see, you're getting wrong. I say again, it won't happen so fast. Give a while. Okay. Oh, we call it as give the let the bullet fly a little bit. Yeah. Okay, now this is something that I want to take a look at. It's a VIX itself. VIX, I think VIX will be a good buy. If you don't mind holding some VIX, I think VIX is a good buy. The low end itself is about 14. The now is about 17. I think the upside can easily hit about 35. Okay, so for those who want to do VIX trading, you can buy some VIX and keep, all right, towards 35 zone. Okay, so now the range is from 17 to a potential downside of 12. So VIX itself, right, is going per contract is 1.00. So which means that if you win or lose, right, well, you lose just $500. Your winning can be as high as about 1,800. Okay. So which means that if you lose 500 potentially. You win, you get 1,008. So this is a long-term trade. It's for like 20 days to 50 days. Okay. So of course you say, wow, if every day the swap itself like $10, then it's like quite a bit of money, right? Of course you must include everything over there. So the upside is 1,000 to 35. Yeah, I'm looking at 35 mark. Yeah, 35, right? Then the downside itself can be as low as 12. So your losses can be as high as 500 if by 17, and your winning profit can be as high as 1,008 if you're talking about, doing that. Of course, you see, Carol, can I wait for it to like, really, 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 shoot up, then I buy? Of course you can. So why am I'm also doing that? So I'm basically waiting for the market to move up like this, and then I will buy the VIX. Yeah. Okay. All clear? If all clear, number 3. Now, does AIMS allow VIX trading? Yes, of course, AIMS allow VIX trading. It allows, yeah. So let me see let me check on the swap, yeah. Let me just get to you on VIX trading. Okay, so how can you go? You can right click, go to under symbols. Then under, if I'm not wrong, it's under, major, is it? Can't remember exactly where is it. Sorry, give me a moment. FX major? Nope. 那边的 crypto 吧，indices 啊，OK，here we go, correct, under indices, VIX, thanks Susan, okay, so here we go, so bring the VIX in. You realize I don't have, right? Because you see, we don't have the back test data. So you see our indicators are not like, people like, plug and play. Oh, all can work. We don't do that itself. Our market, every one of them has its own parameter. So if I didn't do that itself, right, even you plug and play, you don't get to see it, okay? So I cannot have that. So I turn it back to our Dow first. But I can do a bit of simple analogy for you. Let's bring in the VIX right now through common chart. Okay, so this is the VIX right now trading at 19. Right, so the cash market is 19, the so-called the CFD is the cash market is 17, the CFD is 19, yeah? Okay, let's look at the specification. Okay, so the specification states that if you swap long, it's 0.86. If you swap short, it's 0.39. So basically, you long or short, there is a swap cost, but the long one is more expensive than the short. Okay, so you take note there. It's 0.86, not very cheap. So you must take note of that. Okay, so if you want to trade, you can do that. The spread is big, guys. The spread is not small. Yeah, the spread, take a look. Okay, the spread itself is for 30 cents, yeah, because of the low liquidity. So this is really for people who buy and keep. But if you really almost if you buy instantly, yeah, if you notice that you buy instantly itself, right, you will have a 30 cents downside already, huh? So don't go and like put a stop loss 30 cents below. You sure get hit one. Okay. So this one is for long term. You have to put it far, far, far away. If you think that you cannot trade this, then don't trade. Okay. Make sure you know what you're doing, yeah. How much it costs? I told you, that's what you saw already, right? The cost. Okay. The cost itself for long is 0.86. So I believe it's about, if I'm not wrong, if I calculate for probably, let me see, 100, right? So correct. So it's about the one, $8.60, if I'm not wrong. $8.60 per one per contract. It's a one full contract, if I'm not wrong. Yeah. Let me just confirm this later when I do a trade on my own. Okay. Trading time also take note. It's not now. You can't hit the market now. Yeah. It's only opening at 16:30 hours. Yeah. 16:30 is about 8:30 Singapore time. So which means that you don't expect to hit down. You hit the market won't open for you. Yeah, and it closes at about Singapore time, sorry, at 23 hours. That means that it will close at about so about 4 a.m. Yeah, 4 a.m., 5 a.m. Yeah, 5 a.m. Okay, so make sure you all know the timing. Don't go and hey, cannot trade, huh? There's a time. The time is 16:30 hours. So it's actually US timing, then can open the trade. Okay. Now, of course, how is it beneficial for people like us who trade for it? Well, take a look here. On a historical pattern, let's take a look on VIX historical. You can see that historically, VIX itself, right? If I were to buy VIX, I will know that the potential downside can be as much as where I am showing you now. It's about 15 to 14, okay? So where is it now? 19. So it's the same thing now, yeah? So go down by $500 if it's one full contract. So 14 is very safe, but of course, if ever go down, it's about 12.55. Okay, so if you want to be more careful, you give yourself more budget. Okay, now of course, the lowest it ever go was here lah, at 12.55. So if you want to give yourself a sure win range, then of course you go in at 19, example 19, then you lost at only at 11. Yeah, so you give yourself a 7 full point range. Like that is very, 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 very safe. Okay. But of course, if you think that too much, I want to reduce my cost, then can. Then you just have to wait for the price to come down a bit lower, lor. Yeah. So it's really give and take, like, yeah. Now you look at here itself, this is where all the common point, the low is. You can see that we are somewhere near there already. So that's why I think this one can try lah. Yeah? On the average, TP is about 21. So if you buy at about 16 example, then you buy to 21, on the downside is about 11. So that will be for the CFD market. Okay, guys, so this is something that you want to do if you're going to play very, very safe. That's something you can do. Okay, now, of course, recently I think that Benedict made some money from buying the VIX, but he buys somewhere, I think it's around here. He waited for quite a while. Eventually, he hit up all the way to 40. I think he booked probably a 40 around down there. Yeah, so it's a good profit for him, almost 100% gain. But of course, the time decay, and the swap cost itself, all these things will play a part. Yeah. So please take note of that. Yeah. Okay. All clear? All clear. Press number 4 right now. So VIX actually is a contract created just for people to do a bit of hedging against a long position or even short position. Okay, one thing to do now, VIX you cannot hold for long term one. Once you see profit coming in, you just have to take on, don't need to bother. And usually I love to short the VIX when it's too high. Yes, I love to short the VIX. One VIX go to like 30, 40, 50, right? And once you see coming down, you just short it. But of course, we ever seen VIX go to 80, 90, but that is really, really during the very bad period, if not wrong, during the COVID period, if not wrong, the data here don't have. Okay, so take note of that, yeah? So trade with care. Okay, all right, so let's continue. Next one. Okay, so moving into the market now, you can see that the Dow Jones this morning opening price is at 42,338. So with the pivot 2 at 42,532 is a classic sell signal. I repeat, it's a classic sell signal. So guys, if you trust the pivot, take note. Now, one thing to note today is a DJDD at the same time, so the pivot is going to be very, very important. Okay, and the thing is this, you can see now the market has tripped the MA 200 many times today. So the market is basically tapping on the MA 200. Now, if you go to the 5-minute chart, you will see very clearly that the market keep on tapping the MA 200, right? So what does it tell you? That means that very simple, a big movement is going to come in very soon. So take a look over here. You can see that this is the MA 200 being tripped by the market. So by right, it's either like this or like this. Okay, so I think my bet will be simple. If you're buying up itself, right, 42,497 is the KTR plus one. If you buy it to go down itself, then 42,179, okay, it will be the KTR minus one. So if you think it's going to go down, you sell the market. If you think it's going to go up, you buy up the market. It's really up to you as an individual. Yeah. So now at the moment it's above OP and it's above MA 200. So by right, it should be going up. Okay. But again, today's a DJDD. So you watch the whole day to see for yourself. Yeah. Okay. Now for me, basically I'll just follow the OP lah. Very simple. I don't even bother so much. Yeah. Okay, let's look at gold now. This morning, gold went a bit crazy, really big movement. Okay, so gold opening price 32.19 and MLP is 32.21. So basically, it's all right. The opening was lower than MLP, but when the market breaches past MLP, you saw gold shoot up. But when it shoot up itself, right, you notice that around somewhere around here, it got stopped out. Got itself resisted because that was the KCL back then. Yeah, but because KCL can only work for 5 days, so the 6 day today we don't really care. But you can still see there's some form of the shadow over there. Now the boys and retails are still selling, so you don't expect the price to chong all the way up and then doesn't come down. As a matter of fact, when you see KSI, KCX are all in against you, when you're buying, always take profit in every level. I repeat, always take profit in every level. So give you an idea, let me explain to you. Example, this morning, if I traded gold and I buy, what should I do, right? So I showed you right now. So this morning, when the market go open, it gap up first, okay? And then after that, it came down and then it went above OP. So let's say you buy over here, the first TP level will be KTR plus one. Your next TP level is KTR plus two, and magically the market really, really stopped there as if that they know KTR plus two. See, pretty cool, right? Then after that, the price did come down, but itself got itself bottom out again. And because it's above OP, it found strength. Then there was a stacked diamond here where you put a line across it. So initially it went up right, fine, no problem. But once you see it goes down and stay below the line and the boy starts to sell, bang, the market come down. So now why is it recovery? Because now it's back to above OP again. And then we have the diamond again helping us. So the first target will be plus one and plus two. But you must understand the plus one already given earlier, the plus two also given earlier. So this plus one and plus two, right, the strength will not be as strong as the one in front. So that's why whenever the market hit plus one, plus two, right, usually the second trade over here, I don't really trade because if I want to trade it had to go above +2. I'm aiming for +3. Then the impact will be there. While the market's already hit one minus +1 +2, right? Usually this whole area itself will be very slow down already. So I don't advocate trading when the market already hit +1 +2. You got my point? Yeah, if all clear, press number 5. It's the same thing as if the market go to KTR -1 -2, then it recover, right? Although we can still trade it, but I usually will try to reduce my size because the market is always looking for something exciting, something sexy, something new. So when +1 +2 is given already, right? Now, if you ask me, the +1, the market +1 and +2 is given. Now you're asking me to buy again and expect 1 and 2 to be given, right? I can tell you safely as a trainer, as a creator of this, I don't think the chance is there itself. Although, yes, by default it will go, but it's not as strong as the earlier version. Okay, so it's very, very important that you must take note. Yeah. Okay. Last one, we look at the currency market. Let's take a look. Now, the currency market, the dollar yen continued to fall, and that's basically why the dollar weakness in the market causing gold to go up earlier. Now, today is a DJDD, so again, same thing by default itself, right? We should have a either strong upside or a negative downside. So the upside itself will be the KCB somewhere around here, and that will be about 14666. 146.66, the upside. Now the downside itself, we can see it's available here, 1.1, 143.74. So the upside is 146.66, the downside is 143.74. Now the KSI is all the way green. That means that this is actually a elephant trade in the making. All right, so if the market do break up itself 146.56, it shouldn't be an issue. But if the KSI turns to red later on this today, next day, whatever day, then the whole exercise will be over. Yeah, take note of that. Okay, so guys, we'll take a short 1 minute break. We'll come back later again. We talk about the BTP in terms of what is the 5% rule. Okay, thank you very much.